So, good morning once again, everyone. Thanks for being here today. I do appreciate it. I know you probably have better places to be on a Saturday morning than listening to me talk about price action. But price action is one of my favorite subjects, and I'm a little bit like that picture there. When I'm studying price action, I'm all googly eyed and just really focused in on the price action. Price to me is one of those things that um, I can't, I cannot study it too much. And the reason is because it means everything to my career. Okay, with what I've chosen to do. And so I truly enjoy looking at charts and studying price action. And I know I'm just a great big chart nerd, and that's okay. I'm comfortable with that. And if I can help you guys answer some of those questions about some of that price action, the things we might want to look for in those charts, that's what I want to do. Because if we dig into those details, if we really start to work hard at identifying these repeatable price patterns in the market, we do better. Now, last time we talked about two of the basic patterns that I use all the time, and then we talked a little bit about flags. But when I'm talking about price patterns, first thing that is required with every price pattern is a trend. I don't try to predict a trend. I don't want to fight the trend. So I'm always going to be starting out with a trend. And we talked about the pullback opportunity trades right in here. We talked about the pop out of the box type pattern trades, that consolidation over to the trend, and that entry that's right in here. We talked a little bit about flags, the bull flag, the bear flag, in those patterns. If you guys have questions on those, let me know. But remember, one of the most important things, at least to me for pattern trading, is I have to have the identification of the trend. Okay? So today I wanted to take a little bit of time and talk about a few of these other patterns that show themselves all the time in charts and give us an opportunity, give us that little bit of a trading edge. And there's several patterns right here in this chart that this is just one of those charts that is a beautiful pattern chart. First off, I want to point out the wedge pattern. Okay. Now, wedge patterns can be formed in a lot of different ways. And right here, we have this wedge. This is a price wedge. And this is one of those flat top wedges. Now, a flat top wedge, after a sell-off, flat top wedge has a very high probability of rallying out of that to the upside. Okay, they can fail. We've all seen these fail. Okay, but it's particularly after that sell-off and we start getting this bottoming price action. Now, they're not all as concise as this one. This one has a relatively small bottoming pattern build process. But sometimes those bottoming pattern builds can take several months to complete. But what we're looking for in that is we're looking for that tight or that substantial resistance area. I shouldn't say tight, that substantial resistance area that the chart is trying to deal with. And then the key factors in that wedge are looking for these higher lows in that pattern. The pressure on this as we continue to make those higher lows is that push higher. Now, one of the reasons that makes this pattern so nice and so productive is this is really institutions making the decision down in here to start buying up the stock. Okay? When an institution sets down and makes a decision, they sit down in their boardroom and make a decision on what they're going to buy. They'll make that decision that we want to buy. I'm going to use PepsiCo here as an example. We want to buy PepsiCo within a specific price range. And that's one of the things that puts in that top. When they're buying it up and the stock starts reaching up in here, institutions will short that stock to hold it down because they haven't built their entire position here. Keep in mind, institutions, when they build a position, it takes weeks for them to get into the trade. They can't just dive all in with their $40 million or whatever it is, because it makes the stock take off and then everybody else sells it and they lose money. So they have to kind of sneak in. They have to do it a little bit at a time. And these wedge patterns down around a bottom after a sell-off are one of those telltale signs that the institution is trying to move in. And particularly when we have that nice flat top, that place where we can see that line, that place where they are defending that. They don't want the stock to go above there for a period of time. They continuously push that stock back down so that they can continue to build their position. Okay. Now the wedge pattern that builds itself all the way out to the end. Okay. And I'm going to go over here and just draw this up. The wedge pattern that builds itself all the way out to an end is easier to catch the entry signal, because what happens is right through this area right here, this becomes more like a consolidation, right? We get that really tight price action that occurs in here. But sometimes the stock won't wait to go all the way to the end. Okay? Sometimes we get that pattern that looks like this, and the stock moves through in this range, and somewhere in here it pops. Okay. Now, if you catch this right, sometimes you can trade this trade. But I have to tell you, if I were thinking about entering this trade, my last swing low is down here, and I can't take this entry. There's too much risk in the trade. So sometimes on the wedge pattern, if they break that pattern early, I have to wait for the next entry into the trade. And oftentimes when they break out, they're going to come right back and they're going to test this area as support before they start moving up. And typically that will hold somewhere in this overall trend. Okay, so as you're studying these patterns and you're looking for these bottoming wedge patterns, they can spread out. They can be small and concise, kind of like this one. They can be lots of different setups. But I want you to notice that this breakout here, this would have been almost impossible for me to trade. And the reason is because if I would have jumped into this, my stop loss has to be down here initially. Luckily, this one just kind of went sideways instead of that big pop up and then that strong pullback. Okay, so this one wouldn't have been quite so bad. But if you watch those patterns and watch those pullbacks, this one happened to consolidate over before it started to move up. Gives you that opportunity to find that good quality entry. And what you want to think about in this trade is if the institutions, and that's really what you want to think about in here, if the institutions have built this position. Think about this for a second, guys. Do institutions jump in and jump out? Do the big guys, high frequency trading firms, jump in and out? But the bigger guys, the Goldman Sachs, those folks, when they make a decision to be in a position, they're in that position for a while. Okay. So what we can do is we can kind of count on this price pattern leading us in a direction, so we can have some comfort, I guess, is for lack of a better word, comfort in the fact that they are supporting the stock. And if institutions support the stock, the pressure on that continues to build to the upside. We just have to wait, be patient for the next entry into the trade. Is that making some sense? Now, that flat top wedge doesn't occur all the time. We've seen wedge patterns that don't have the flat top, right? The wedge pattern that, just a second here. That wedge pattern that is more of that symmetrical. You'll hear folks call them a symmetrical triangle. Okay? Now, in that symmetrical wedge, this pattern has, if you take in enough data on this, what you're going to find is this pattern will often have about a 50-50 directional on it. And what I mean by that is about 50% of the time it's going to break to the upside, and about 50% of the time it'll break to the downside. Okay, so we don't have that flat top. We don't have that resistance area, and we don't have that sell-off. Okay, we don't have that sell-off that triggers the formation of that flat top wedge. Okay, so those can be a little bit trickier, but they're just as handy to watch, because they definitely will provide you with some good signals in trades. Now, what I will tell you is those symmetrical, you have to be a little bit more patient with those. Watch those really carefully in that chart and wait for the signal. And that's why you see me, guys, when I mark out one of those symmetricals on a chart, and you guys see me do it all the time. I see something like this in the chart, I am going to force the stock. It must break out. It must prove that it can hold as support, and then show those buyers picking it up. It's the only way I want to trade those, because so too many times that I've been in these trades where we'll pop and then we'll immediate reverse and come back down. Okay, so I need that proof the buyers are going to hold this up here. Okay, we want to pay attention carefully to that. And honestly, you can do the same thing with the flat top, right? The flat top, you don't have to anticipate that. You can let the stock break out and pull back, particularly if the breakout occurs early on in that wedge. If that wedge looks more like this, and the price action has been moving throughout this and just continues to tighten up, a lot of times you can take that trade right here. Okay, you don't have to wait. But that symmetrical is a little bit different in the sense that once we break, and by the way, isn't this just a downtrend? So what we've got is we've got higher lows, but we've got lower highs. So if the stock is still downtrending and we're moving like this and we're failing at that level, doesn't it make sense that you want to break through and prove support on that trade? Because we're breaking the downtrend here. We're trying to shift and make that reversal occur. So we want to watch for that support level to happen in that chart. Now, this pattern that I just drew out there, that symmetrical, is also in a small version. Just a second, I need to. The small version of that would be right here. The small version, a lot of people call that a pennant. Now, a pennant pattern requires the stock to have a pretty substantial move up. We get this good pop up. That's the flagpole, okay, on this pennant. And then we get these little tight consolidating price action thing where there's a defined top and a defined bottom. Okay, now the pennant pattern is also one of those nice continuation patterns that you want to watch for. This one happened to break here early, and notice that it came back. It broke early, it came back, and it's moving out here toward the tip of this pennant. And then we finally, yesterday, get that confirmation of support being held in here. Now, that doesn't mean this can't continue to consolidate over or anything like that, but we're proving some support here, right? In that chart. That pennant is trying to hold up. So we have an opportunity maybe here to take this chart and move this on higher. Okay? Make sense? Now, all of these patterns repeat themselves in the market so much of the time. If you take the time to draw them out, focus in on those price patterns, you will see how often they occur over and over and over. This bottoming wedge happens a lot of different ways in a lot of different charts. Let's take a look at NVIDIA here for a second. I'm going to come back to PEP, but okay, can you guys see that pattern was being created right in here on this chart? There's those rising lows. There's that price resistance across here. Now, we happen to take this trade really early down in here. Okay. You can do that if you can have the willingness, if you plan the trade and say, look, even if it rallies from this point, if we have enough swing in this move, that if I buy this here, I could make sufficient money to here to make it worthwhile. If that's as far as it goes. Okay, so when you have those bottoming wedge type patterns, if they have nice big swings in them, sometimes you can take that early entry on that trade. If, again, you plan that trade from here to here, if I get into this position, my stop loss is here, and I have a profit target up here. If I'm entering this trade somewhere around in here, I'm still making more money than I'm risking. If all I do is rally up to there and this continues to pull back and develop, finish up that wedge. Okay? So they're going to come in lots of different ways. They're not that perfect pattern all the time, are they? They're not that perfect, easy to spot wedge. Okay? Now, when you look at this chart, and you can see in a lot of different places, I mark these downtrends like this. Do you see, even though I haven't marked the bottom side of this, do you guys see that right there is a price wedge? It's more of that symmetrical price wedge, right? It's not that flat top price wedge. So what happened in this chart? We popped up and look, we came back and tested the top of that. I don't know why that occurs so often, but it does. You could have made money on this, on that pop out, but just know that there's a high probability when that occurs that we're going to come back and we're going to test. Here's an example of that same type of pattern right here. This is more of the flat bottom wedge where we pop and we never make that successful test happen. So being a little bit patient on the pattern and knowing where you are in the overall trend or pattern of the overall chart makes a big difference. Here's another one of those, and you'll see them all over in the charts now that we've talked about them. Here's another one right in here. There's those rising lows, and here's this little resistance area right in here. Okay, and there's our break. There's our possible early entry into that trade. We're winding up tight. I'm guessing, I don't know, because of this gap, this was probably earnings. Okay, but you can see that pattern does play itself out over and over and over in these charts. Okay, let's go back here to PepsiCo. There's another pattern there I wanted to talk about. Any questions on any of these? Is this making sense? Studying, awesome. Studying price, studying these patterns can help you an awful lot in your trading. And here's a pattern that we all know, but we often miss. Okay, and I can tell you this is something that I used to do. I would miss this pattern because I just wanted the stock to go up, right? And I would see this stock rallying into here, and I'd be like, oh man, I got to hurry up and buy that. And I would buy that right up here near that price resistance point. And this pattern would just gut me like a fish. Okay, you guys all know this pattern. This is a head and shoulders pattern. We have to be very cognizant of those patterns in the chart because they repeat themselves so often. Now, this is kind of that symmetrical head and shoulders where the shoulders are pretty much level with each other. Okay, and you can actually get somewhat of a guess how far this pattern could move once it breaks. In the head and shoulders pattern, this is the neckline. Okay, where you put those two shoulders together, we're looking for that neckline. And if you were to measure, okay, from the very top to the center to the neckline, I'm going to draw this length will tell you about the distance that the failure will occur. This one went a little bit further. Okay. But it gives you that idea of how far the stock might fall. It's not perfect, as you can see here. But it tells you very, very close where that kind of a target you might search for in that pattern. Okay. Inverted head and shoulders, those bottoming patterns, just flip this upside down, you deal with the same way. Okay. Yeah, you can use them as kind of a measured move, but just remember there's no perfect in it. Okay. You can have a guesstimate. There's no perfect in it. And it doesn't necessarily mean that it needs to fall in a straight line like this, right? We fail through support here. What's a typical thing to happen? Retest and then pull back. Okay, so they don't have to fall in a straight line. But you can measure that out and look for those places where you could be taking profits on that trade or watching for that bounce to come back into play. Okay, makes sense? Yeah, it really is important. And to me, price action and price patterns is where the money is. Um, there's an old saying that I think it was Andrew Carnegie read it in a book. I think it's in the book Think and Grow Rich or something like that. Andrew Carnegie um, um, had he gave a reference to gold mining, and he said um, when you're looking for gold, you go through tons and tons, mountains of dirt, but you're not looking for the dirt. You're looking for the gold in the dirt. I look at price patterns and price action kind of the same way. A lot of this price action and price patterns is just the setup, right? Napoleon Hill, yeah. It was just the setup. There's a lot of dirt right in here, right? We're not looking for the dirt. Although it's all of that dirt that we're sifting through that's setting up the price pattern, right? That consolidation across here, that nice tight consolidation over to the trend, and we can set our alert up here and catch that entry very close to the trend off of support. So all of this area here is we're trying to sift out and screen out the dirt. We're looking for the gold. But a lot of this price action is just that dirt that is setting up where we're looking and sifting and we're trying to find that good price pattern, that good trade to get us to the gold. The same thing is true in this pattern right here. We're watching this develop. We're sifting through all of this dirt, waiting for that potential entry into the trade. Where we catch over, I meant to put that over here, catch over here, we catch in here, and we try to make that position occur. Same thing here, we're watching all of this, we're sifting out all of this data, but what we're looking for is we're looking for that failure here, we're looking for that gold that occurs right here. Does that make sense? If you've ever watched any of these gold mining shows, what they'll do is they'll do all this investigation. They'll look for places where water is run, and they're looking for these little cracks or crevices or anything that could have been a trap. The water's running and they see this feature in the river or whatever where there is a trap where it's deeper in one section. It's a crack in the rock. And they go digging through that, and that's where all the gold will be. Because it's moving along in the river, and then it hits that lower area, drops into this trap, and it's stuck there. And we're doing the same thing here, aren't we? We're looking for that price flowing along. But we're looking for those good patterns that give us that high probability that there's gold there. Now, the hard part about trading patterns and in price action, anything, is the patience to wait. The patience to sift through all of that dirt, do all of that digging, watching and waiting for that trade to occur. But if we are patient, if we take our time and we watch those price patterns carefully, we can get some very, very good entries into those trades. Okay? Any questions on any of that? No. If while you might be typing or something, while you're thinking about that, remember the price action within the pattern is also important. Okay? That price action, notice how our candles in here tighten the range. That's the wedge. They tighten that range. And the tighter that range gets, if this has to consolidate even more out in here, this is a better pattern to me. The tighter that gets. And the reason that's important for me when it comes as an option trader is the tighter that gets. What happens when price action gets very, very tight and concise? Implied volatility falls, right? Yeah, implied volatility comes out of the options. The tighter, the smaller the move. We get that implied volatility that collapses on that trade. So when it does move, we get that bigger explosive price action move because the volatility then expands. We also have that ability to get that lower risk entry into the trade because our stop loss can be so close to price in that circumstance, right? So we want to focus in on that that price action within that chart. We want to sift through that dirt. Okay, we're looking for the gold, but we've got to sift through all of this price action dirt, and we've got to be patient. We've got to be patient. Okay. Well, you could, Mike, but here's the thing. I mean, if you're looking at that pattern and you're trying to catch something early in here to do just because you want to do something, I'm going to shift over here to psychology for just a second. Remember what I said about the importance of these patterns is we have to be patient. Okay, we've got to be patient and let the pattern develop. How many times have you seen this? We move up in here and you think, oh, hey, this is going to be a failure, so I'm going to do some kind of a spread in here, and then the stock takes off. See, anytime we try to rush a pattern or rush a trade, we open the door to a failure. Can you see how trading maybe trying to predict? And here's what I mean by trying to predict this. We can't see any of this price action over here. This hasn't occurred. This stock falls. Okay? And we try to predict that this is the bottom. We don't know that this is going to wedge here. We have no idea. And the stock rallies back up to resistance and then fails and just continues its trend lower. Wouldn't that be the normal price action? Following the trend? Isn't that what we do? Follow the trend? So we never know what the outcome of these price patterns is going to be until the pattern finishes, until it develops. And impatience in your trading is going to cost you an awful lot of losing trades. See, this is something that I think we all need to think hard about. We come to the market every day, and there's a group of folks that think I should trade every single day. If I'm not trading something today, I'm not doing my job, and that's not true. This idea that we have to be ultra aggressive, be in there fighting every single day, is just not true. If you need some proof of that, look at your account. Isn't that proof enough that that aggressive pushing every single day for a trade is not working? Trying to predict that this is going to wedge is like trying to predict where lightning is going to strike. We don't know. We don't know until it finishes, until it develops. Okay? Trade less, make more. Wait for the pattern to develop. Now, that doesn't mean that you can't take price action trades and things like that, okay? Because you certainly can. But please keep in mind that when you're out there pushing every single day for a trade, when you're forcing trades, I am watching the market, I have to trade today. I want everybody to know that that is just wrong. Unless you are an active day trader, that is just wrong. When I day traded, and I was actively day traded for multiple years, I day traded futures. There were days where I wouldn't make a single trade. I would sit and stare at that chart the entire day and not make a trade because the patterns, the trading was erratic. It was a mess. Now, it took me a long time to develop that discipline, to wait for the better trade, to wait for the edge. But if you force or try to predict a price pattern, chances are that price pattern is going to hand you a loss. What you thought was there didn't occur. Use this for example. Do you know how rare a V bottom is? A V bottom almost never occurs in the market. There's one right there. I mean, it is so extremely rare to see a V bottom play out. You cannot know that's going to occur. Right? Couldn't have this done just exactly this, moved up and broke back down to a new low? Yes, of course. Just like it did here. Just like it did here. So we have to wait for the pattern to develop. Where could we enter this trade? Well, we break the downtrend. We pull back, tested as support, and then buyers step up. That's our entry. That's our potential in the trade. That's where we get the proof that buyers are stepping up into this. But we have to wait for it. If we try to anticipate it, if we try to predict it, it costs us a lot of money. And I would rather be patient, trade fewer times, and then make more money. And the reason you make more money is because you trim off some of those losses. Let's say you have 10 trades and what you're normally working at, what you're normally hitting is a 5. You win 5, you lose 5. And a lot of people think that the first thing that they need to do is improve their winning trades to improve this win-loss ratio. And I would tell you the thing that you need to do is cut a losing trade. figure out what's costing you that losing trade. Is it pushing? Is it forcing? Is it rushing? Is it what is it that's creating that many losing trades? Your winning trades are working for you. So let's see what we can do to lower this to 4, because there is a massive change in your results when you're running 6 winning trades out of 4. 6 out of 10 trades. Right? And that's one of the reasons why I say it's so important on your losing trades to evaluate that trade, to figure out what caused the problem. Sometimes it may not be anything that you could have controlled, and that's okay. But sometimes you will identify, man, I just keep making this mistake over and over and over again. If I want to improve my win-loss ratio, I have to stop doing this. So we have to think about that losing trade first. What's creating the problem? Are we predicting? Are we anticipating? What are we doing here? Are we forcing trades? I have to trade something because I'm sitting here. See, if you can go back and review those trades and find out those mistakes that are occurring and trim off just one losing trade out of your next 10, your ratio improves. Okay? It's not necessarily improving your winning trades. Your winning trades worked. You executed them. If you made money, you executed them pretty well. You followed through. You made money on it. You can't learn a whole lot from your winning trades. You can learn a lot from your losing trades. And just cutting a few of those losing trades out will make a dramatic difference in your results overall. Okay, makes sense? Didn't intend to go there, but we went there. Okay. Let's take a look at kind of what I call a gap and go type pattern. And that would be like Lulu. All right. Lulu made this big gap on earnings. We don't want to chase that move. I know everyone wants to have, man, if I could have just owned that, right? But here again, we all know that earnings event could have been completely different. So what I want to do on this gap and go, I see that stock that pops. I want to watch this pullback carefully. And particularly if I get one of these nice big candles like this, if I get a nice candle like that on the gap, I want to make sure when that stock pulls back that it holds the low of that candle. Okay? I want this candle held right here. And then see those buyers coming in. It can go sideways. That's okay. But I want to see that come into play. I want to see that hold. This one didn't do that. This one gapped and pulled back. But notice right in here, this right here is a pop out of the box pattern. 4 days, tight consolidation. No buyers above, no sellers below. There's your pop out of the box on a gap and go. So we gap, we get that little resting pullback, that little consolidation, and then the stock continues to move itself higher. Okay, that's where that energy momentum is coming into play in the stock. We got this kick, like kicking the football. It it opened, left the ground here, it comes back to the ground here, but it still has momentum and it's moving forward. That ball hits the ground and just keeps tumbling forward. Okay? And that's what we're doing here. That momentum from that big pop is attracting people and they're moving into that pattern. Yes, there was a Fig Newton. You're right. Okay, kind of that gap and go. Let's take a look at another one. RCL. Kind of that gap and go. Gets that follow through momentum from that big move. All right, but we always have to wait for the pattern. Notice this one right over here. Gap and no go. Breaks that candle, comes all the way back and fills the gap. So we have to be patient and wait. Not try to predict it, wait for that trade to occur. Any questions, guys, on these patterns? Now, I don't use, people use lots of different patterns. There's diamonds, there's trumpet patterns, there's a slew of patterns out there in the market. You can get really deep in the weeds on some patterns. I try to stay with those basics. Okay. I try to stick with those basic patterns that are pretty easy to identify, pretty easy to see in a chart. I mentioned Boeing the other day as a potential trade. Now, you guys can see this is that symmetrical triangle, that symmetrical wedge, right? So what we're waiting for in here is we're waiting for the move. I can tell you this has about a 50-50 chance of going either direction. We have to wait for that move to occur. We need to wait for that proof. And because this has moved over and so tightly consolidated here, does anyone think you could maybe get a good trade here if that popped up with your stop loss just directly under this nice little support area? I wouldn't, Michael, no. I don't like straddles to begin with. And the reason is the straddle is about the most expensive trade that you can make in options. And to make a straddle work, you need some kind of an event to make the stock move big. This is not one of those things. This is not a news event to make the stock move big. Because remember, one side of a straddle is always a loser. Okay. So instead of getting real fancy with the trade, how about we just wait for the price to pop or to fail? If this happens to get that bullish candle and pop up out of here, instead of trying to predict or get ahead of this and trying to make some kind of fancy prediction on it, why don't we just wait for the chart to tell us where it wants to go? And see, a straddle, that's all a straddle is. A straddle is just someone trying to predict. Around earnings, they can kind of make sense because anything is possible in earnings, right? And we get this big explosion of energy that comes out of that trade, out of that earnings. At least you hope. At least you hope there's a big explosion of energy, because if it doesn't around earnings, you lose money. So for me, rather than trying to be fancy with that, how about we just let the chart tell us where it wants to go? And then enter the trade. Now you could trade this. You could look at BA and say, look, it's $376. There's no way I can trade this as a directional trade. It's too expensive. Fine. Then place a bull put credit spread down here when it pops. And just let it run. Let it do its thing. I wish I could make that candle happen for you, Jared. I really wish I could. Um, because we all know it could do this too, right? Valerie, this pattern right here, remember, like I said, that symmetrical pattern can definitely do that. And it's not uncommon, right? If we were to get this pop, catch this pop, doesn't mean it's going to go straight up from here, does it? It could pop, come right back down, test before it goes up. Okay. Very much like PepsiCo did over here. In this symmetrical wedge, little pennant pattern, pop, come right back to test before it goes up. Okay. These price patterns like this out of a significant sell-off, okay, these will normally play out a little bit easier than those symmetricals, as long as we're patient and wait for them. You'll see a lot of bottoming patterns that occur like that. Baidu. Take a look at Baidu right now. This is the level that I will be paying attention to in this chart. You guys see the price wedge? Now, I don't know if this is going to fail here, and it looks like it could very easily fail. And notice that it popped once, but never held that support. Okay. Now, if this continues to wind up, and by the way, these are pretty big swings in here, right? If this continues to wind up nice and tight in here, I might be able to take that when it pops here. If it were to come right off of this low right here, right now, this darn thing keeps changing tools, comes right off here and pops through, well, I'm going to require it to hold support and show me buyers before I get in. Okay. Can you guys see that this could be that bottoming pattern of institutions saying Baidu is now down here far enough? It's cheap enough to make it a buy again. That institutions might be trying to pick this up in here. They're making a decision for us. We don't have to predict the bottoms. They do. They make that decision. And if we watch and wait for that decision to be made, then we have an opportunity to profit from it. But there's no need to rush. You know, we can see that the downtrend has been broken. Okay. we've got another new downtrend within the pattern. That needs to break. But this level right here, think about it. If you were an institution trying to build a position, wouldn't this be the area that you would be defending as you build your position? That'd be exactly what you'd want, right? You would be fighting to keep that stock below that level so that you can continue to build your position in the trade. Okay. It could be a good time to buy that leap, but only after we get that signal up here, okay? And remember, when you do a leap, you need to evaluate that on a longer term chart rather than just a short term chart, like a daily. You want to be looking at a 2-3 day, that kind of thing, to enter that trade. Okay, for that longer term look. And you want to make sure that you manage it based on that longer term chart. So catching something like this in that longer term trade, yes, absolutely. One thing I love is I love to find stocks that go through a kind of they've been in a nice trend. The trend has been really, really strong. They go into this protracted pullback consolidation. It's not really an ugly, ugly sell-off, but more of just a resting period. Okay. So you can see here in Nike, and I'm going to go to a weekly chart because you guys were talking about a little bit longer term. Okay. These nasty little protracted pullbacks. Whoops. Stupid thing just keeps changing. I don't change those colors, guys. It's changing these colors and the tools all on its own. It drives me nuts. That kind of a pullback. Notice that in there took about a year. But overall, what's wrong with the trend? Nothing. Nothing is wrong with the overall trend. But we go through these long patterns sometimes, these pullbacks, these resting periods, these consolidations that last for quite a period of time. But they produce incredible results once you come out of those patterns. And you can see they're very common. Here's a very shallow one. That one lasted, I don't know, a little bit under a year. And those patterns continue to play themselves out. Now, when you're looking at big charts like this, these patterns mean a lot more. Okay? There's that big downtrend, the break of the downtrend. Hold in here. And you can see what happened after that big pattern developed. Really choppy right through here. I got to tell you, probably wouldn't have traded any of this in here until right about here. There's that break, that hold, traded that. Okay, so these patterns play out on all different time frames. And if we watch carefully for those, we can get some of those longer term type trades, okay? We can get them. They happen in the big patterns as well, or in the big charts as well. Okay. Take a look at I'm going to show you some old charts here. I show this one a lot because this was just such a great trade for me. There's that big rising wedge. There's my entry. How cool is that? I mean, it works on all of these patterns, on all time frames. That big rising wedge, flat top wedge. Beautiful pattern. And they happen all the time. They happen in lots of different places in charts. Big patterns, big trades. Take a look at, this is an old one too. And I told everybody about this one. I don't know if anyone remembers. Here's this great big giant flat bottom wedge. I told everybody about this when this broke. Okay. Popped and pulled back. Look at that move. Pretty sweet. So you can see these, my drawings will go back, and I don't care how long it takes. There's one of those big inverted head and shoulders patterns. Notice that it's not symmetrical. We've got our shoulders out of whack. But let me show you. If I draw from here to here, and then take this and move this up here, can you see that the pattern actually played itself out that way? The potential up move that happened in the chart. You know, that just takes time, Alan. Going through the charts and looking for those patterns, it just takes time. Just lots and lots of practice. And that's what I would tell you guys, just lots and lots of practice. And you'll just start to see them. You know, there is something that you can do that might help you see some of these patterns. And I'll even reveal a couple others to you here. By the way, here's another inverted head and shoulders pattern. There's the neckline. Is to change your chart. I'm going to see if I can find something without. Okay. Is to change have one chart. You might want to try this. This was kind of an important thing for me. Change it to an area chart, just a one color area chart. Can you see the patterns now? Doesn't that inverted head and shoulders just kind of pop off the screen here now? Oh, for Pete's sake. That area chart really highlights them. Makes them easier to identify. You know, if we go back and we look at that chart in PEP on a daily. Can you see the head and shoulders pattern there? Pretty clearly. Can you see the wedge right in here? Stupid thing. Right here. And those rising lows. Just taking a quick look at an area chart or having it as in part of your charts can sometimes help you see those big patterns. Okay, and let's say let's go to, I'm going to go to the diamonds here. I want to show you this on the diamonds, and if I take this, let's go to a 15-minute chart. Can we find those patterns in here now Anybody see the Head and Shoulders top up here on that 15-minute chart? Yeah, just kind of hits you in the face, doesn't it? Yeah, big old V right here on that 15-minute. Take a look right over here. There's a couple patterns that I'll give you here off of an area chart. See right in here where we get these lows, rally and low, and then we start up. Notice how this one's just a little bit higher than the one before, right here. Okay. That's a pattern that I call Batman ears. Now this is not a true Batman because it's not the this is the inverted Batman, but I don't know why I put these stupid names on things. It's just what I see. It's that double ear upside down, and then that starts that movement higher. There's that double Batman right there. Starts that move higher, and you'll see that in charts in a lot of different places, both upside and downside pattern. Now in a 15-minute, there's a lot of noise in the market right now. They're not showing up real clear here, but you'll see them in a lot of different charts on a lot of different patterns where that Batman ear will come into play on that area chart, and they can be the bearish Batman ear and the bullish Batman ear. Okay. Yeah, there's kind of one right in here. That one's a little bit harder to identify. Okay. But isn't this area chart pretty cool in the way that, see how descriptive it is as showing us our downtrend? Showing us when the downtrend ends. Showing us when we start breaking those wedge patterns to the upside. Really descriptive, right? It gives us a really interesting way to look at a chart and not get us stuck over here on the hard right edge. Okay, we have to look at that bigger pattern, and this is just that 15-minute chart. And we can already identify there's that nice flat top wedge. We can identify the downtrend. We can identify the big Head and Shoulders top that created this problem. Will your trend lines be on this chart if you draw your trend lines? Yes, as long as you're on the same drawing board. If I put this on my normal drawing board, all of my trend lines and everything are going to show up on here for my daily trends. But I put this on a drawing board to remove all of those so that I could just show you the area chart patterns. Yeah, it works great. It'll work great for weeklies as well. Let's take a look at Microsoft on a weekly. Can we see patterns in here and see how smooth and easy this was to achieve or trade? Gives us some of that fun look at the chart. So for example, right in here, this is one of those protracted pullbacks. Multi-month pullbacks. It adds clarity to the patterns. It does. And like I say, I think the best thing that this does is it stops you from only focusing on the hard right edge. Now, let me ask you this. When you see this occurring in here, does anyone think that there could be a problem coming in Microsoft? that we've gotten a little bit extended here. Went a little bit parabolic. May have to go into another longer resting pattern. Doesn't mean we have to fall. We could just go into a longer resting pattern. Yes, right in here. Pretty steep. That rarely can last too terrible long to go that steep. Okay. Just imagine, just imagine me, a 57-year-old man trying to climb this mountain. Am I going to be running out of air up here? I am wheezing and coughing and probably crying a little bit. On my hands and knees trying to climb that mountain, and at a certain period of time that just kind of wears out, right? All that energy kind of burns out and it needs a little rest. Yes, it needs a little rest. Oops. There's a nice Batman ear right there. Okay, so take a look at some of these price patterns and see if that can help you do a more in-depth look at that price pattern, the price action, and look for those nice quality patterns that come up in charts that we can identify pretty easily. By the way, do you guys see this right here? See how easy this is to see? There's that flat top wedge again. After that significant sell-off, institutions making a decision here. Isn't that cool? Institution, we can see it now that we talked about it, we understand it. We can see when they started to make the decision that Apple was too cheap. Yeah, very cool. All right, guys. Hey, I want to wish you all a great Saturday. Anybody have any great plans today? Early Mother's Day. Awesome, Terry. Lawn work. Yeah, I got lawn work to do. I've got flooring work to do. I got a busy week ahead of me. Alan's going to study some charts. That's awesome. It's a good thing to do on a rainy day, right? So thanks, everyone. I appreciate you being here. Hope you got something out of this today. And we can continue this process and revisit these as we go along. This is kind of the second one in the group, and I'll try to get both of these loaded up. Last week's or not 2 weeks ago, and this one loaded up so you guys can review these again. And these will just be on the members page. I don't think I'll put those over there on YouTube. Haven't decided yet, but they'll be on the members page. Okay. I'll try to get these uploaded this weekend. Okay? On the members page. Everyone have a great weekend. Thank you very much. I appreciate you being here. And we'll talk to you all bright and early on Monday morning. You're most welcome. Take care now.